Hello everyone, welcome to our channel StoxFactor. Hope you are doing well. Friends, here we come up with yet another video of weekly market analysis in which we will discuss the important levels for the indices and then we will look at some stocks which provides us good opportunities for the next week. So we'll quickly jump to the index analysis page and we will quickly see the Nifty and Bank Nifty levels for the next week. So if you have watched the video of the previous week, we discussed the important levels of Nifty and Bank Nifty because there was an expiry also last week and we made the video just after the expiry. And we also discussed how the rollover data has to be analyzed. So if you have not watched the previous video, I highly recommend you to watch that video because you will get a sense of how to analyze the rollover data, especially for the indices. We did a very thorough analysis of the indices rollover data and that will be really helpful for you in the future also. So we have given the link of that video in the description also. You can directly click on the link and watch that video. So starting with the Nifty. So in this video, we'll quickly discuss the Bank Nifty and Nifty levels. We already did a very thorough analysis in the previous week. So we'll quickly look at the important levels for indices and then we'll move to the stocks. So before we start with the analysis, as you already know that these videos are for learning purposes so that you can do your own analysis the same way and identify high probability trades. So let's look at Nifty levels. So before that, I will quickly take you to the TradingView chart and we discussed the daily chart of Nifty in the previous week video. And we were discussing about this candle when the Nifty gave the breakout from this channel the previous week itself after the expiry, right? And we discussed the levels. We need to be cautiously bullish and long positions have been created in Nifty just after the expiry and now the higher levels can be achieved. So with a strict stop loss, we maintained our bullish view in the Nifty. And as you can see, we have seen a magnificent rally this week in the Nifty. So you can see Nifty went up to 17,925 levels and then we saw a slight profit booking because the short-term players, they book their profits when the index has rallied so much. And now on the last trading day, we have seen some kind of consolidation. So if you look at this particular candle, if you see the low of this candle, the support came at 17,655. The Nifty bounced from that level and closed above. And after that, we saw again Nifty went up to 17,900 and then closed just above 17,800. So we have seen buying two times at these levels. Now we will correlate this with the derivatives data. So this is how we have to do the analysis. So we have to relate the price action with the derivatives data, which gives us more confidence that our analysis is backed by the data. So if we see the important levels for Nifty as per the option chain, so we can see that in the PCR, we have seen a good move and in the monthly PCR also, we have seen good amount of put writing. In the weekly PCR, we are seeing some amount of call writing on the upper levels, right? That's why we have seen a slight fall in the PCR level along with the rise. So let's analyze the option chain in detail also to identify important levels of Nifty. So as you can see, first we'll see the OI change on the last trading day. You can see good amount of put writing at 17,800 levels and there was some amount of call writing also, but good amount of call writing at 18,000 levels. Right, and below that we have seen very good amount of put writing and we have seen some call unwinding at 17,700 levels. So this gives us the confidence that there is a support coming at 17,600, 17,700 levels. And that can be also seen here that we have seen good amount of put writing at 17,700 levels, you can see, and 17,600 levels. And now if we look at the total cumulative open interest, we have selected the expiry date. But first of all, we'll also look at the total cumulative open interest combining all the expiries and then we'll analyze the current expiry. So here you can see we have a straddle playing at 17,800. We have a straddle here. We have a good support at 17,500. We have a major support here now. This is the first level support and also the major support for Nifty. Some amount of support will come at 17,600 to 700 levels. We can see very good amount of put writing at these levels also. And we saw that in the price action also in the chart. The first level of resistance which can come at above 17,900 levels because we saw profit booking above that level and we are also seeing good amount of call writing. After that, the major resistance level is 18,000, right? So these are the important levels. Now, if we quickly look at the current expiries. So you can see the picture is very much similar. We have a straddle playing at 17,800 and we have good amount of put writing at 17,600 at 700 levels. Now, if we consider this straddle and we look at the premium of the particular strike price, that is 17,800. So if we quickly look at 17,800 strike price, so put price is around 127 and call price is 147. So this is around 260 points. So the players who are playing the straddle, so they have taken the premium up to 260 and they are safe in that particular range. So this is the high probable range for the Nifty for the current expiry. Obviously we have to follow this data every day till the expiry. Now this also aligns with the immediate support for the Nifty at 17,600 to 17,000 levels. We saw the premium of 17,800 put, which was around 127 rupees. So that aligns with, it comes around 17,670, right? So that's why 17,600 levels will act as a very good support for Nifty for the current week. And after that, 17,500 will act as a good support. So these are the important levels for the Nifty for the next week. Now we will quickly look at the Bank Nifty levels also. We can quickly see from here that Bank Nifty has a strong resistance at 38,000. This is the maximum resistance as per the option chain, and the maximum support is coming at 36,000. Now let's quickly look at the option chain to get the important levels for Bank Nifty. We have seen very good call writing at 38,000. So 38,000 happens to be the strong and maximum resistance for the Bank Nifty for the current week. So the current date is selected. If we select the cumulative open interest also, let's see whether this is the same picture or not. So we can see here 38,000 still has the maximum resistance, maximum call writings. So it will act as a strong resistance, and we have seen that also, that on the last trading day, if we go to the Bank Nifty chart, we have seen selling which came at above 38,000 levels, and there was an indecisive candle on the last trading day. So now we have to watch these levels. And now if we again quickly select the weekly expiry, that is the 13th of January, we can see that put writing is more at 37,500, but still there is a slight straddle which is being played out at 37,500. So the immediate support, which will be a good opportunity to buy, will be below 37,500 levels. If you are an aggressive player, you can buy around this area and putting a strict stop loss below 37,400. But if you are a conservative player and you want to increase the probability of your success, please wait for the index to come near 37,000 levels, that is 37,200 levels, and then you can place a trade putting a stop loss below 37,000 levels. So this will be acting as a strong support for Bank Nifty, right? And similarly 38,000 will be the immediate target for you, and any bounce above 38,000 can be used as an exit opportunity for the short term trade, right? Now if you want to place a trade above 38,000, you have to wait for the index to sustain above 38,000, and you should be able to see call unwinding happening at this level. So unless you see call unwinding happening at this level, please avoid taking long positions at these levels. So these are the important levels for the Bank Nifty for the next week. Now friends, we'll quickly look at some stocks which provides us a good opportunity for the next week. So first, if we quickly go to the weekly monthly page, we can see a very good amount of rally in various sectors, including Bank Nifty, PSU Bank, Fin Nifty, oil and gas sector, auto sector, metal sector. So we have seen a good rally in majorly all the sectors except IT sector, pharma sector. So in the defensive sectors mainly, the profit booking came, and apart from that, all the cyclical sectors, they gave a very good rally. So people are expecting good amount of recovery in these sectors. Now let's quickly go at the daily summary page and let's look at the last trading day. So let's quickly go at the bottom tables and let's look at the stock opportunities. So the first stock which you can see here in the long build-up is the India Cement. We saw a magnificent rally in India Cement the last trading day, and you can see the one-day move was around 16%. And along with that, we had a huge delivery percentage, you can see here, and long positions were being created previously also in this particular stock in small amounts. And then we have seen a magnificent rally. And also this is accompanied by a very huge open interest. Now let's quickly right click this particular stock and let's look at the important levels by drilling through the stock. So starting with the important levels, we saw that the previous day the low price was 208 and the price hit the high of 247, and at very last we saw some profit booking coming for the intraday, and we saw the price closing just below 240. So around 7 points the profit booking came. The average buying price for that particular day was 231 rupees, right? So this is the VWAP for the previous day. And now let's look at the important levels. We can see 250 has the maximum call writing. So this will act as a resistance. That's why we have seen some selling coming around 248 levels. So we'll quickly see the option chain to identify important levels. But before that, we can see that there is a sharp jump in the PCR. This is a highly bullish scenario. Right now, put writing is very heavy as compared to the call writing. And similarly, we have seen a jump in the base level also, right? Now let's quickly look at the option chain in order to understand the important levels for this stock. So clearly this is a very high momentum trade. So we have discussed that our reference would be the average price. So average price was 231 around. So if we want to make a buying attempt, please make a buying attempt near the average price, not far from that. So currently the close price is around 240. So we'll not buy around that price. If we want to make a buy attempt, we will buy near the average price. So we will see the average price of the previous day. It is around 231. So any range around this price, 232 to 234 range, that will be acting as a buying opportunity, and we will put a very strict stop loss below the average price, that is around 230 levels, right? And then we will wait for the stock to bounce from that level, and our exit will be above 240, around 245 levels, right? So this is the way we have to take a trade. We will not take a buying trade or the fresh trade between 240 to 250 levels unless we see good amount of call unwinding happening above 240 levels. So let's for that quickly look at the option chain. We can see good call writing at 240 levels and 250 levels. So this range will act as a resistance, and we have also seen the selling coming above 240 levels, that is around 248 levels. Now let's quickly look at the premium of 240. So 240 premium is around 11 rupees, right? And 250 premium is around 7 rupees. So 240 plus 11. So around 251, the call writers are safe for these levels. So that's why when the price came near 250, the selling came, because the call writers, they will be incurring losses above 250 levels, right? So they will not allow the stock immediately to go above 250 levels. So immediate target for us will be above 245. If we have taken a position around the average price, we'll quickly exit at these levels. We'll book the partial profits if we have more than one position. Otherwise, if we have one position, we'll exit it, right? And we'll wait for the stock then to see the call unwinding happening at these levels. Then only this stock can make an attempt to go above 250 levels, and that move will be very sharp. If it goes above 250 levels, that move will be very sharp. It will go above 255 levels, and again some resistance will come at near 255 to 257 levels, because we have the 250 call writers also, which will pose as resistance above 257 levels, right? So this is how we should know the important levels as per the option chain, combining it with the futures data also. Futures data suggest a very strong call open interest, but for the option chain, we have to understand the important levels, and we have to watch the levels where the maximum call writing exists, right? So this is the way we have to analyze the data and then take the trade accordingly. Now we'll quickly go back to the daily summary page and we'll look at some other stocks. Another stock which we can see is ONGC. So in ONGC, you can see a very good amount of future open interest increase in the long build-up, and along with that 4% price rise. And you can see that there has been a long build-up in this particular stock for the previous 5 days continuously, along with a huge delivery percentage. So let's quickly right click this particular stock and we go to the drill through stocks. So now let's quickly analyze the important levels for the ONGC. We have seen a very good amount of rally along with the huge volume and along with the huge delivery percentage. So this is backed by the cash market data also, this move. So this is a very sustainable move. That's why it has rallied so fast. And we can also see the maximum call writing, that is maximum resistance at 160. Currently the price is 157. So it is very much near the high price. So this is a perfectly bullish candle. So right now, if we quickly go to the chart also, if we select ONGC, you can see a good bullish candle along with more than average buying in the cash market also. Now you can also see some resistance coming around 160 levels. That's why this is very much correlated with the option chain also. So friends, in this way you have to analyze the data. So we can see that some amount of resistance coming at 160 to 165 levels, right? And that is backed by the option data also. Because you can see in the option chain, we can see that in the previous day, along with the price rise, we have seen good call writing at 160 levels. And that's why also we can see the maximum call writing is at 160 levels. 20 million OI is there at 160. So if we quickly look at the premium of 160, we can see the premium is around 3 rupees. So the resistance can come around 162 to 163 levels around, right? Any move above 162, that move we have to watch clearly, because selling can come at those levels. There is a huge call writing happening. So we advise not to buy above 160 levels. So now if we look at the important buying levels for this particular stock, we will consider the option chain and we'll also see the previous day's data. So we can see the relative strength of this stock is also very good. It is outperforming Nifty and it is also outperforming the sector also. Now if we look at the last trading day, the low was 151 and the high was 157, and we can see the close price is also 157, right? So this stock if on the next opening day it makes a very sharp move at the opening only and it goes above 160, we will wait for the stock to retrace. We will not buy above 160 levels unless we see a very good call unwinding happening at 160. Then only that stock can make an attempt to go above 160 levels. Unless we see call unwinding along with the rise, we will not make a buy attempt. That will be a selling area, right? So now if we want to buy this particular stock, we will wait for the price to come near the between the average price and the low of that level, right? So we'll wait for that, and then if we are a conservative trader, our stop loss will be below low price, right? And if we are an aggressive trader, we can make a buy attempt near the VWAP and put a strict stop loss. So if we want to take a very high probability trade, we will buy around 152 to 153 levels, putting a strict stop loss below 151, and then the chances of success are high because it can bounce very fast from that level and it can give us a 4 to 5 point move very fast, and that will be a momentum trade for us. So in this way we have to take a trade, right? So we have understood the levels where to buy and where not to buy. We'll take the example of two more stocks, that is GSPL and Coal India. So let's start with the GSPL. So in the long build-up, again we can see GSPL, a very good amount of future OI position created, that is the cumulative open interest, and then we have seen a good price rise. And on hovering also we can see that in the previous 5 days, we have seen that 4 days there has been a long build-up in this particular stock. So let's quickly right click this stock and look at the important levels for this stock. So now the data for this stock is very interesting. You can see the maximum call writing is at 310 and the close price of the stock is already above 314. That is, the VWAP is also more than the maximum call writing price. So we can see very good amount of cash buying in this particular stock. And now if we look at the open interest data of the futures, we can see a huge long build-up in the previous week. So we are looking at the weekly data, huge long build-up in the previous week, and also in the daily chart same can be seen. So price rise along with the futures cumulative open interest rising. Now if we quickly go at the option chain, let's look at the important levels. We have seen very good amount of call unwinding happening at 300 levels. Now friends, this is very interesting. 310 happens to be the maximum resistance area where the maximum call writing is, but the positions are very light in the absolute terms. So the volume in this stock is low. So option chain right now doesn't have that much positions. So this will not pose as a very strong resistance because the absolute number of positions in this particular stock is less, right? So that's why we have seen a good amount of cash market and the cash market player has taken the price higher. The reason for the low volume is that this stock has recently been added in the derivative segment, that is the FNO stocks. So just 2 months have happened. So that's why the cash positions will be more dominating as compared to the derivatives positions. And in the derivative segment, the future positions will play more important role as the option chain, because we have seen that good amount of future cumulative open interest has risen as compared to the previous days. So long positions being created at this level and now at this level. So now if we also relate this data with the price action. So as I told that if we combine the derivatives data with the price action, that gives us the more confidence. Let's quickly look at the price action of the previous trading day. So if we see that from the previous 3 days, continuously from the previous 3 days, 200 EMA has been respected on closing. So on this day we saw price went on the intraday basis below 200 EMA and on the closing it went above. Similarly this day and this day, that's why we saw a very sharp up move from the immediate levels of the 200 EMA. Now you can see that this zone happens to be a resistance area as per the price action. So 320, above 320 there is a resistance. This is the selling zone. So we can expect some amount of selling coming at this particular level. So for us the buying opportunity will be 2 levels. First is the average VWAP price. So one attempt near the average VWAP, putting a strict stop loss below that. And the second attempt is the price when it breaks the average VWAP, then the next level of buying would be near the low price. That is the range of 302 to 305, right? This will be the next range for us to buy if our stop loss hits just below the average VWAP. Then we will put a strict stop loss below 300 if we make an attempt to buy near the low price of the previous day. So these are the 2 important buying levels, and for both the levels we'll put a strict stop loss, right? And similarly the selling levels for us will be if this price makes an attempt to go near 320 levels. So 320 levels, we can see that in price action, and as per the option chain, that 320 levels will be the levels for us to exit. And if this stock has to give any move above 320, it has to move above 320. We have to see call unwinding, and we have to also see that this stock sustains above that level, because we have seen huge selling in this stock coming above 320 levels for many a times. So that's why this will act as a strong resistance. So once this stock moves above this price on the closing level, then only this stock can make an attempt to go up to 350 levels. So this will be a selling zone for us, and we will not buy near this level, we will buy above this level if this stock goes above this level on the closing basis. So in this way, we have to understand the levels of the stock and then we have to trade. Now last, we will take the example of Coal India. First, we will quickly see the price action. We can see the similar price action that it respected the 200-day moving average continuously for the previous 3 days, and that's why this stock can give us a good momentum up to this levels, that is 165 levels. Now if we quickly look at the data for this particular stock, we have selected Coal India, and starting with the cash market data, we have seen good volumes, more than average volumes. And now let's see the important levels. 160 has the maximum resistance and 150 will act as a support for this stock. Looking at the futures cumulative open interest, there has been a short covering in the previous week, and same can be seen in the weekly data also. So this move was accompanied by the short covering in the derivative segment along with the buying in the cash market. Now if we quickly look at the option chain, we'll directly go to the option chain. We can see very good amount of call unwinding happening at these levels, so around 155 levels. So if we quickly expand this particular level in order to see what is the exact level where the call unwinding happened. So at 155 price, the stock price sustained above this price, and we have seen good amount of put writing and we have seen very good amount of call unwinding. So for this stock now, 155 will act as a very strong support, right? Any move below 155. So if we quickly look at the premium of 155, so this is the first level support for us, 155. So if we are an aggressive trader, so we can make an attempt to buy. If we quickly look at the premium of 155, so the put premium of 155 is 3 rupees, right? So any dip towards 153 levels, right, 153 to 154 levels, that can be utilized as a buying opportunity, putting a strict stop loss below 152, and we can expect a sharp move because some amount of support will come at those levels, and we can expect buying coming at those levels, and that can push the stock higher to 157, 158 levels, and also possibly above 160 levels. Now if we look at the option chain for this particular stock, we can see that maximum call writing is at 160, right? So 160, and if we see the premium of this particular strike price, that is at 160. So we see 160, what is the call writing price? So we can see 3 rupees. So 163 rupees. So at 163 to 162 levels, we can expect some amount of selling coming. So there we can expect the resistance for this particular stock. And if we relate that with the price action also, that's why we mentioned that above 160, we have seen that this candle, we saw a selling. So at this price, we can expect the certain selling coming. So we can expect this move to be sharp, and the selling we can expect coming above 163 levels. But if the price sustains above 163 levels, and if we start seeing call unwinding happening at 160 levels, then we can see a very good move up to 175 levels. So then the door will open for the next levels. So we have to watch the important levels, as I mentioned, above 160, and if the buying attempt below 155 levels, so between 150 to 155. So this is the way we have to trade this particular stock, because this stock has already given bounce 3 times from the 200 EMA levels. So this is the rationale behind taking the positional strategy on this stock. So we are talking about positional trading in this particular stock, and we have a time frame of at least a week. So friends, with this we come to the end of this video. Hope you like the video, hope you like the analysis and the rationale we have presented, why and when to trade a particular stock and when not to trade, and the important levels how we can identify using the derivatives data. So whenever derivatives data is combined with the price action, you can perform a very good analysis and thorough analysis, which will be backed by the data, and it will give you the more confidence to identify high probability trades. If you have any questions regarding this video, please post your questions on the comment section and we will definitely answer your questions. And if you have not subscribed to our channel till now, please subscribe to our channel so that you can get the notifications of such videos which we post every week, so that you can learn how to perform your own analysis for any index or any stock. And if you want to get the access of our dashboard, please visit our website www.stoxfactor.com for more details. See you in another video. Take care and goodbye.